welcome to the Shipper Update. I'm lead economist here at FreightWaves, Anthony Smith, and behind me I have an interesting chart. I have the Producer Price Index, and so this is going to be an index that shows what producers are paying upstream for these prices. And what we've seen is that this Producer Price Index has, of course, increased over the last few months. Not too much of a surprise there if you've seen anything in the headlines as of late, but what we are seeing is that maybe some of those producer prices that are increasing are starting to ease just a bit, but that's not saying that they're coming down. So behind me in this chart here on the blue line, I have a year-over-year change for all commodities, and that's going to be one of the key areas to watch very closely is going to be that commodity area, because when we're looking at the entire supply chain for shippers, for producers, for manufacturers, those commodities are going to be the key component that's really going to drive production downstream. You need to have this stuff before you can make the stuff. And so looking at the commodities, looking at that area, that's where a lot of these bottlenecks are happening and have happened. Looking at what's going to do, it's going to happen to have these price increases downstream, which you may have already seen. Now, one of the things that we are starting to see within this inflationary pressure or these commodity shortened era right now throughout the pandemic is a thing called shrinkflation of sorts. And so that's essentially where you are paying the same price for less stuff. Now, you may have seen it when you go to restaurants and you're used to getting a little bit more portions, or maybe when you go to the grocery store and you see that maybe there's a little bit more air in those bags of chips. And so there's going to be different variants of shrinkflation. And I think I'm going to do an Economy Lately episode on it coming up. I think the production team wants another one. So looking at Producer Price Index, this is going to be a key indicator to watch because those prices are surely increasing and those increases are going to pass on downstream. Looking into the next chart here, we're going to look at what's going on in the upcoming releases. So it's just before 10 a.m. if you're watching this in the first hour or the first couple hours of the day and not later on in the afternoon. This has not come out yet, but we're going to talk about some of the expectations. So what we've seen in some of those jobless claim numbers, the unemployment rate, even though that there is improvement, we are seeing that there is a slight slowdown. There's a slight easing. And so I wouldn't be surprised if there was a slight easing in this upcoming morning's release that's going to be out here. And I think just under or just around 30 minutes or so, 35 minutes. So looking at the job openings job openings report, I'm anticipating a slight easing. I mean, I think there might be growth, but I wouldn't be surprised if there even was some decline. I'm not expecting some overt gains. We're seeing that momentum is still growing. There's still an expansion, but there's a slight easing in effect right now. And so that's going to be one of the areas to watch. This is going to be a light week in terms of economic releases. And so in our next chart is going to be one that I'm going to be watching closely, surely, and that's weekly initial jobless claims. And so on the weekly initial jobless claims, we're seeing that there are continued lows being reached. And that was good news last week when we saw a new pandemic low. But we are still seeing easing of sorts. And so we saw that continued claims are coming down. Last week, we also saw that the unemployment rate was coming down. So those are going to be the reports. Those are going to be the areas that we're going to be watching very closely when we're looking at what's going on within the economy. We're looking at what's happening with its employment side. It's going to be really pivotal to watch what's going on upstream. We just talked about those producer price index, those producer price increases. We'll look at that manufacturer side. These jobs are also going to really play a big role. And so when we're looking at what's going on within those manufacturing industries, within those factories, within those warehouses, they are desperate for more workers. If you look at anything like the PMI, the ISM PMI report, it's going to outline that there's a lot of demand for labor that's not being filled right now, even when it kind of wavers up and down. That demand aspect is alive and well. And so that's going to be another area that's going to add to those pricing pressures or those increasing prices when we're looking upstream. And of course, as you know, those things are going to come downstream. When we're looking at what's going on real time for consumers on the ground level, you might see that there's some type of shortages in the grocery stores or in the local retail stores where you are. And that's not going to be the same story as what we saw at the beginning of the pandemic when there was a complete run up on goods. But now there's just such a shortage, such a bottleneck of goods right now. And so that's going to be one of the areas that those shippers, those producers, and consumers alike are going to need to watch. We're looking at what's going on within manufacturing. That's, of course, going to lead into a lot more of those flatbed outbound tender rejections index. You know, I love watching the flatbed market, but that's going to do it for this segment of the Shipper Update.